Hi everyone, good morning and welcome to today's morning report. Charter Pros on Tuesday the 26th of July with me, Richard Perry, market analyst at Handtech Markets. We've got a sort of fairly sort of mixed open really. Equities mildly lower, but the FTSE 100 is outperforming, and that outperformance is coming on the back of sterling weakness. Actually, sterling is down again. It seems as though that sterling is now beginning to track lower once more, and that is coming on the back of sort of expectations ever since that PMI data that we got last Friday, that the Bank of England are going to have to do some sort of easing. And it's now beginning to sort of track lower. It's testing the sort of 2-week lows. 30.60 is that low, and it could well be on the brink of another breakdown. But other than that, we've got in the forex markets dollar weakness, and that general dollar weakness, as you can see in this trade weighted dollar that's fallen away, is basically being driven by the yen strength that we've got. Dollar yen is sharply lower, 160 ticks lower on the day. And that's coming on the back of, again, sort of the expectation that perhaps this huge stimulus package in Japan that the government and probably the Bank of Japan are ready to announce. Bank of Japan announces on Friday that could well underwhelm the markets, and the rally that we saw, the sharp sort of 700 odd tick rally that we saw on dollar yen, is beginning to unwind, and today it's sharply lower. So we're seeing that, and that dollar weakness is helping to finally support, to a certain extent, the oil price, but still the oil price has broken down. That was WTI, Brent crude, again, initially a little bit of a tick higher, but again sort of falling back down again. The oil price is under pressure as this dollar has generally been strengthening, although, as I said, today the dollar weakness doesn't seem to be supporting oil that much, but it is supporting the gold and silver prices, but doesn't seem to be doing too much for oil, and the worry is that global demand is an issue, and also the glut of supply is still not been sort of cured, and there were reports out that that Russian oil supplies were sort of hitting levels above Saudi Arabia, sort of over 10.4 million barrels a day. So that is and that is a huge number. So we're seeing that impact on the oil price, generally speaking, and that is pulling prices lower. So generally, we've got a slightly mixed outlook, really, on markets today. But as I said, we're slightly lower on equities, and that's coming again in front of the Fed and the BOJ, which are two big meetings this week. Fed begins its 2-day meeting today. We'll get the announcement tomorrow night at 7 o'clock UK time, and then the BOJ on Friday morning. So what else have we got to look forward to today? Well, just a bit of US data, really. You've got the S&P Case-Shiller house price index, which is basically basically shows the house price growth in the US, and it's 5.5% at the moment. Consumer confidence. So let me just show you the Case-Shiller. There we go. Again, the problems with my Reuters data continue, which is annoying. And then we've got the consumer confidence in the afternoon, expected to come in at 95.9 is the expectation there, and that's a slight sort of decline from last month, which was 98.0. And then finally we've got the new home sales, which again are expected to be quite positive. So housing data in the US has generally been quite positive in recent months, and ticking higher, and that would help to support the dollar again. But certainly sort of traders are beginning to look towards the Fed tomorrow night. So with that in mind, I've got my charts today, which is the S&P 500. Now, I don't usually look at the S&P 500 too much, but the run higher that we've had basically since that Brexit decision, initial reaction lower, S&P 500 just rallied higher and kept going into new all-time high ground. If I zoom out, you can see that breakout, but the move is slowing, and the last sort of week or so, the market has basically been going almost nowhere, and yesterday again threatened to sort of roll over. You look at these momentum indicators, RSI sort of plateauing, MACD lines plateauing, stochastics plateauing. That doesn't necessarily give you too much sort of expectation of further gains, because we've obviously had this huge run higher since late June, and it's starting to give a few corrective signals. You look on the hourly chart, you look at this drift lower on the hourly RSI, the drift lower on the MACD lines, and it certainly looks as though it's stalling, and it could well start to come under a bit of corrective pressure. It's not a huge correction if there were to be seen. You got 2155 basically is the support initially. It's a minor breakout level and subsequent support. So that's your support that you need to be looking out for. You had a sort of pick up off the lows yesterday to finish with a candle that was reasonably corrective, but nothing too significant. But certainly looks as though the S&P 500 is now consolidating in front of the Fed. Now the Fed's likely to drive the direction in the coming days, and certainly if the Fed is hawkish, that would drive dollar strength, and I think that would drive a S&P 500 correction, because one of the reasons why the S&P 500 has rallied quite strongly has been the expectation that monetary policy would be, or monetary tightening would be pushed out into the long grass, or certainly towards the back end of the year, maybe even 2017. So that has helped to push equities higher, and if the Fed is even remotely remotely hawkish, I think that would start to drive a bit of a near-term correction. Now 2134 is the old high breakout, so that would be an ideal area, as would 2120, which was this breakout from resistance from June. So 2120 to 2134, I think S&P 500 is a good support area, but this little rally is beginning to roll over, and it'll be interesting to see if it starts to correct. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.